We need people employed, and we need to do it without having inflation that really causes havoc in our economic system.
Welcome back to 701 Chain. I'm Michael Lane, here with my co-host, Devin Smith. Today, we're joined by Bernie Sinner, president of BankNorth and newly elected Class A director for the Federal Reserve Bank of Minneapolis. Bernie's been a longtime leader in North Dakota community banking, and we're excited to talk about his new role at the Fed and what it means for our region. Hi, Bernie. Thanks for joining us today.
Michael, great to be here. Thank you for inviting me.
Bernie, you and I first crossed paths a few years ago at Graduate School of Banking in Madison, Wisconsin, where you were serving as an advisor on the GSB board. You've had a very successful career in banking, serving many roles over the years. Can you walk us through that journey of yours?
I appreciate the kind words, Michael, and happy to kind of reflect on that. I think often about sort of the accidental entry into banking that I've had, and what an attractive opportunity it's become. So about 40 years ago, I was looking for a job because I was going to graduate college, and went to a job fair, and there were a handful of banks that were recruiting people for these, trainee positions. Hadn't really even considered banking. I went to St. John's University in Collegeville, Minnesota. So liberal arts school, got a business administration degree, grew up on a farm just outside of Castleton, and really believed that if I was going to stay in the Midwest, it would be because I was going to be a farmer. And the opportunities that came from this job fair included a bank that was looking for an ag lender. And it turned out to be an opportunity to get into the industry. I served a little bit of time in that first year and a half or so as all in ag finance, and then moved over to Sioux Falls and got expanded into retail and commercial lending, and then had an opportunity to come back to North Dakota to farm with a family member, which is really what brought me back to Castleton. And again, thought the only reason I would be back would be to farm. But after doing that for a while, I came back. If any of you listening to this show remember what happened in 1988, it was probably the worst drought in North Dakota's history, certainly in the history of the people that were actively farming. And it was humbling to come back and think that this was an industry that had all kinds of opportunity and success in front of it. But with no rain, it was pretty humbling to realize what you don't have control of directly in agriculture. Stayed with that with my brother-in-law for about 5 years, though, and things certainly didn't stay quite that tough in ag. But additional opportunities emerged in the finance world, and I started back into the banking world, Fargo, back in the I guess it would be the mid-90s. And after doing that for a while, this community bank that was looking to expand into Castleton asked me if I would consider coming back to Castleton to do banking again and do ag banking again. That was a little over 26 years ago. We are now, instead of 3 locations, we are 11 locations. And my role has grown a little bit from being a customer-facing ag lender to now president of the company and overseeing our lending portfolio. So senior lending officer is kind of my really core responsibility at this stage of the game.
That's awesome. And outside of the actual day-to-day banking roles, I mean, you've sat on several boards. Can you elaborate a little bit more on that as well?
Yeah, along the way, you mentioned that we met at the Graduate School of Banking in Madison, and certainly those educational opportunities, it really started at Dakota School of Banking in Jamestown, the North Dakota Bankers Association 2-year program that really helped me understand the difference between community banking and the kind of banking that I was doing with a large national company. That led to more opportunities, including the Graduate School of Banking. And with each of those educational opportunities came an opportunity to expand my network. The people that show up at those schools are the same people that show up at association conferences. And what I've learned with all those people is that together we have an opportunity to do things that are much beyond what we can do individually. So it's always been attractive to me to volunteer for these opportunities to serve on boards, give feedback, whether it's an advisory board to a school like the Graduate School of Banking or an association like North Dakota Bankers Association, to kind of collectively put the efforts of the members into a collaborative pool of folks that want to make a difference.
Yeah, I mean, speaking about boards and appointments, so you were recently elected as a Class A director for the Minneapolis Fed. For listeners, can you give us a simple overview of how the Federal Reserve is set up and what the regional feds like Minneapolis actually do?
Sure. And that's something that I've learned a lot more about in the last year than the prior 35 years or so that I've been in banking. So, yeah, the Federal Reserve System. We hear a lot about the Fed in the news because they meet about every 6 weeks to talk about interest rates. We also hear about the Fed chair, and so we know there's people that are in positions to set monetary policy. And what I learned after becoming a little bit more involved and through the orientation and education I've received as a board member is that this is the third central bank system that the U.S. has put in place. The first two failed because they were very centric to the federal government and didn't include sort of a broader voice of the regional parts of the country. So the current system was established in 1913. And it's comprised of 7 board governors that are appointed by the current administration. I believe it's a 14-year term if they serve the full term. In addition to those 7 governors, there are 12 Fed districts, and each of those districts have a bank president that really run that regional bank and provide the various services that the banking industry relies on. So when you think about a community bank that needs to order currency and have it brought in to serve our customers, that money is being managed through the Federal Reserve System, through the vaults in this case, in Minneapolis, where our 9th District Bank exists. Going back to kind of how they function, the voting members of the FOMC, that group that meets to set monetary policy, which is also different than the Board of Governors, is all 12 bank presidents plus those 7 Fed governors make up the 19-member FOMC. The voting members are the 7 governors and always the New York Fed bank president, and on a rotational basis, 4 other bank presidents. So at any given time, there are 12 voting members of the 19 members of the FOMC. And so this year, Neil Kashkari, who is the president of the Minneapolis Federal Reserve Bank, is a voting member of the FOMC. And so his voice will be particularly important in this calendar year as a voting member.
So what is your role as a Class A director? What does that comprise of?
Yeah, so the biggest purpose of the board engagement is really to have good boots on the ground intel on the region that makes up the 9th District. The 9th District is comprised of Montana, North and South Dakota, Minnesota, Northwest Wisconsin, and the UP of Michigan. So that's the geographic footprint. And within that, we have some very distinct industries like agriculture, energy, maybe timber, along with all the commercial that you can imagine goes on in the larger metro areas like Minneapolis, even Fargo, Grand Forks, and the metropolitan areas of Montana. The board is made up of 9 members, 3 Class A members, 3 Class B, and 3 Class C. And the Class A members are actual bankers in the district that kind of represent the banking industry. And then based on various bracketed sizes of banks, so we represent really small community banks, maybe mid-sized community banks, and then larger, slightly regionalized banks, because each of us have a unique perspective on the kind of business client that we typically have, the kind of consumer we serve, maybe even the geographic footprint within our market that we serve. And so as a Class 8 member, I'm going to represent that activity of a community banker within the 9th District.
Just changing gears a little bit. So we've all heard of the Federal Reserve's dual mandate, right? Maximum employment and stable prices get talked about a lot. How would you explain it in plain language so folks here in North Dakota can help understand the concept even more?
Yeah, I think their goal is really to have a stable economy, which means we need people employed, and we need to do it without having inflation that really causes havoc in our economic system. And so that tension that happens between the demand for jobs and the placement of jobs and the price of goods and services that those jobs are creating. And they try to do that with the monetary policy tools that they have. And the two that are really most evident to all of us are what they call the Fed funds rate, or the overnight cost of money, the money that it costs for banks to lend between each other. And the other small piece that they have is the way the size of their balance sheet, and that's sometimes referred to in the market as quantitative easing or quantitative tightening. It's whether they go into the bond market to buy bonds to prop up that supply and to reduce the cost of long-term money over the short-term money. Those are the tools that they use to try to really navigate that dual mandate that you asked about or talked about.
Yeah, and so when it comes to that Fed funds rate, there's this common misconception that mortgage rates move exactly with the federal funds rate. Why doesn't changing the Fed funds rate directly change a consumer's mortgage rate?
So when you think about a mortgage rate, you can think about it as a consumer that you think about typically a 30-year fixed rate loan. And if you imagine the investor that is providing that money, the person that's looking for that kind of an investment is looking out longer than overnight in their term. They're really tying it to maybe a 10-year treasury rate, which is much further out into the horizon of what might happen to inflation or the economy down the road. I think the average life of a mortgage when an investor buys it is somewhere between 7 and 10 years, because people move for whatever reason, they pay off their loan. And so that's really the piece of the market that dictates what's going to happen to mortgage rates. You've heard of an inverted yield curve. When they're trying to slow the economy down, short-term money gets really expensive. But that might happen when mortgage rates are low because there's not a lot of demand in the market for that part, or there's not a fear of inflation in the future. And so that dynamic is a tension that's always in play. And when you think about what's going to happen to mortgage rates, you're probably better vested watching and navigating what the market is doing rather than what the Fed's doing.
Sure.
As a fellow North Dakota citizen and taxpayer, can you help us break down the difference between what Congress does through appropriations and fiscal policy, and what the Federal Reserve does through the monetary policy process?
Well, I'll risk getting into the weeds a little bit over my head, so I'm going to be careful in answering that, Michael. But and I think in a really simplistic way, we can talk about that when we talk about the budget deficit, for example, or just the nation's debt. When we talk about interest rates, we worry about how are we going to pay back the $40 trillion deficit that the country has.
Absolutely.
And we look at the Fed to maybe answer that question, but it's really not the role of the Federal Reserve. That deficit spending is a decision that Congress makes, and the mandates that our congressional delegation is saying, these are the programs we want to fund. This is what we want to do. This is where we're going to spend money. And so when we think about what challenges we have with the deficit, whether it's deficit spending or managing our general deficit that's already on the books, we really have to think about the people that we elect more so than the Federal Reserve to manage that tension.
No, I appreciate that. That helps kind of help us to better understand the Fed's role as compared to, you know, some of the more, I should say, elected officials.
Yeah, fiscal policy and monetary policy, need to know about each other, but they are very two different things, driven by different pressures and different levers, so to speak.
For sure. Let's kind of turn the tables here. We've obviously been talking with bankers such as yourself across the entire state of North Dakota on our Roughrider Coin. Do you have any questions for us right now on Roughrider Coin?
We've been interested in the conversation because we're curious, like so many. There's a lot of pressure in the fintechs and the demands for what's happening with uh, the dollars that we use to fund most of our loans. And so when we heard about Bank of North Dakota going into that space, it certainly piques our interest. And knowing that we want to be part of the conversation, understand what the intended use cases are, how that might contribute to either creating more sticky relationships or creating more profitable model for how we do what we know we do, but also understanding what is so interesting, that's making the fintechs get the traction that they're getting. So maybe my question, is what is the status of some of the things that you rolled out at your recent B3, um, I guess workshops is what the way I think of it. But what can you give me for an update on your progress toward modeling some of those tools that you've talked about?
Yeah, so absolutely. We very recently spent some time up in Toronto working with the developers at Fiserv, looking at the platform that we aim to provide all of the banks and credit unions in North Dakota, making sure it fits the goal that we wanted and it has the structure around it to do what we want to do, which is that true bank to bank payoff. Like that's the entire infrastructure that we're focusing on right now is that new payment rail that you and your peers around the state of North Dakota can use moving forward to efficiently and quickly send money to and from each other.
Knowing that, right, the first use case is very vanilla on purpose. We want our FIs to be able to understand the new blockchain technology, be comfortable, kind of crawl, walk, and then run approach. Obviously, and we continue to say that our phase one is more proactive, with our potential phase two, phase three, phase four being more reactive, meaning that we're going to continue to listen to our FIs, bankers like yourself, to help them kind of paint the picture of what they foresee phase two, phase three, phase four looking to be. We do plan on within the upcoming weeks here, really putting together that FI packet to provide to our financial institutions that are interested in utilizing Roughrider Coin. That will have a lot of the user guides, FAQs. So more to come.
Yeah, we look forward to that. I think there's so many, um, there's so many curious players that want to know more, and yet there's that fear of the unknown. So it's a balance to understand what's a distraction from the work that we do and what's really an enhancement to the work we do. I trust that you're having those kinds of conversations all the time, and what led you to pursuing this is that, it sounds like you're looking to find efficiencies. Security is another piece that we're always concerned about when we get into this space and we remove friction. What does that do to the security piece? Is there anything high level that you can share about that?
Yeah, the security piece, obviously very important for us as well. We always say that we are risk managers first and foremost, right? And so when you look at Roughrider Coin, both on the blockchain level and the wallet infrastructure, with some of our partners, and I won't get into those names, but we have some of the best partners in the business, helping us launch Roughrider Coin. We truly believe it's safer than your alternative payment routes, because we are launching a permissioned asset. So we have more permission and controls than the traditional. banking payment systems such as your ACH or wires. We feel very, very confident with the product that we're rolling out here within the next 60 to 90 days.
Yeah, at the end of the day, this entire thing is being developed with you and your peers in mind. We know that you have safety concerns. We know you have regulatory concerns. You want to make sure exams still go well. So every step of the way, we're really taking into consideration all of those thoughts and questions that you and your peers are going to have for us.
Yeah, safety and security continues to be, paramount. It's any type of fraud, whether it's cybersecurity or the old-fashioned check fraud. Those are the kinds of things that we continue to, have to navigate daily. And when we find solutions that help us reduce the opportunity for that, we're certainly grateful for it. I think about check writing, alone, and all the different tools that we've worked to establish to minimize that. It's still the preferred method for so many of our customers, and it's a slow evolution, I guess, to get completely digital and electronic with the movement of money.
No, absolutely. I completely agree with you. I think we'll continue to see it evolve over time, right? It's not going to be a flip of the switch, but something that will continue to evolve in within the financial sector for sure.
Well, that's about our time there, Bernie. Did you have any parting words that you wanted to leave for our listeners?
No, I really appreciate the opportunity. Maybe I guess that parting word would be my role again while I'm on the Fed, and it is a 3-year appointment, but it's to represent the economic activity in the state. If you've got some unique interest or insights into what's going on in your part of the state, and you want to track me down, that's the role that I serve, is to bring that voice to the people that are making decisions about interest rates and monetary policy. So happy to serve the region, proud of the state of North Dakota, and appreciate the partnership with Bank North Dakota.
Absolutely. Well, again, thank you very much, Bernie. It was a pleasure to have you.
Thank you for listening, and a special thanks again to Bernie Sinner for being with us today. We'll see you next time on 701 Chain.
This recording is for informational purposes only. It does not constitute legal, financial, or investment advice.
The views expressed are those of the hosts and guests and do not represent any organization, including Bank of North Dakota. Please seek professional guidance before making financial decisions.